Welcome back, everyone. I hope you're having a great day. And in this episode, we're going to take a look at 4 companies worth having on your watch list for this upcoming trading week. Now that earnings season has come to an end, we still have some major events coming up over the next few days. We have some developer conferences, some major investor day presentations, and even a highly anticipated product launch happening over this upcoming week. And we're going to take a look at 4 very different companies who are all respective leaders in their industries. They're all dominant players within the tech and the consumer sector, and a few of them have seen some major pullbacks away from the 52-week highs, making some excellent buying opportunities. And in this video, we're going to take a look at all 4 companies, go over their current operations, evaluate their financials, and discuss the future expected growth over the next 5 years. But before we can jump into stock number 1, I'm going to ask you to please hit that like button and subscribe. I'm the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe for the daily videos. And the first company we're going to go over in this Sunday's episode is the largest company in the world, ticker AAPL, which of course is Apple. They trade for $125 per share, and the company's included in this week's episode because they're hosting their WWDC 2021 event, which is their worldwide developer conference. It'll be a fully virtual event that begins on June 7th. And at this conference, investors all around the world are looking forward to different updates for Apple's operating systems for both the iPhone, the iPad, and even the Mac. And there's rumors that we could see a brand new MacBook Pro being revealed at this event as well. So overall, investors and different developers all around the planet in many different industries will be tuning into seeing what Apple has to share over this conference starting on June 7th. So that's why they're included in this week's episode. This is a major event, and if they share some positive news, it may lead to some upward momentum in Apple's share price. And we can see that over the trailing 12 months, the company is still up by 56%. They have a market cap right now at $2.1 trillion, trading with a forward PE of 24.4 and a very slight dividend of 0.7%. And from their high point, Apple is still on a slight downward trend set back in January 2021 of over $143. The stock is now down around 12%. And in my personal portfolio, I am a big fan of Apple, and it is by far my largest position. I own 101 shares with a market value of over $12,000, and I'm currently up around 20% on my Apple position. And I plan to hold this company long term, and I actually may buy more over this upcoming week as well. And why I love Apple so much is because the company is a cash cow, and I believe for long into the future, as they continue to develop their business, grow their service revenue, their cash flow will still continue to accelerate for many years to come. And as I just mentioned, Apple's service revenue quarter over quarter continues to hit new all-time highs. And in Q2 2021, they generated over $16.9 billion of revenue from their services alone. And the company has done a fantastic job of developing new services to offer on the market. And we can see right now, the list is already long and it continues to expand. They have the App Store, Apple Music, Apple Pay, Apple Care, Apple TV Plus, Arcade, News, and even Fitness. And there's more and more products in development to come out over the next few years. And I'm a true believer that over the long term, Apple services will be the driver of the business. I think it's going to become the number one revenue and income producing activity for the company. And with such high margins, I think it can really make Apple a more dominant player in the tech industry in the software-based sector compared to where they are today. And we can see by taking a look at the company's income statement, year over year, they're still expanding. In the trailing 12 months, the company generated over $325 billion of total revenue. And although they are one of the leading companies in the world in terms of sales, I think that number can still grow even larger. I think as the company develops more services, that picks up in popularity, the growing revenue at such a large scale with high profitability is going to set this company apart from their competitors for long into the future as well. And we can see by taking a look at their cash flow statement, what I mean when I say Apple is a true cash cow. Just taking a look at their free cash flow. the bottom line year over year continues to expand. $50+ billion of free cash flow back in 2017, up to 64, then 73, and in the past year, in the trailing 12 months, Apple has generated over $90 billion of cash. $90 billion of free cash flow coming into their business in only the past year is absolutely remarkable. And I think for long into the future, Apple will continue to do major share buybacks, pay out a growing dividend, make acquisitions, pay down their debt, and just become a much more healthier and strong business because of their major free cash flow levels. And going forward, analysts feel the same way. And Apple is expected to grow at 18% per year for the next 5 years going forward. And from their current position, they are considered a buy, coming in at a 2, and the share price of $125 is actually well below the 12-month expectation of around $160 per share. So overall, Apple, even on Wall Street, is considered a buy now. The 12% dip in share price may make now an excellent opportunity to buy the largest company in the world. Their revenue is still expanding year over year. They generate immense free cash flow. They're a cash machine. The company's doing major share buybacks to bring that capital back to their investors, and they set up a plan to do $90 billion worth of buybacks over the next 12 to 24 months. And as a whole, I think Apple is just one of the strongest companies in the world, and I included them in this Sunday's episode because they are hosting their WWDC event. Plus, they are on a slight downward trend, making this week a nice opportunity to follow along with the company, and it may be a great time to buy a few shares. So Apple is the first name we're going to take a look at in this episode. And now if we jump in to stock number 2, its ticker ETSY, which is Etsy. The company currently trades for $164 per share, and they absolutely exploded throughout the pandemic-ridden 2020. With in-person retail being shut down all across the country, consumers were forced to shop online. And Etsy's marketplace for unique and personalized goods grew in popularity very fast. And in only a few months, they attracted tens of millions of new buyers and sellers to the platform. And the company believes that going forward, all the new attracted buyers and sellers will remain on the platform and continue to use it even after the pandemic is over. And we can see that in the past year, the share price is up 104%, even after a major pullback from the 52-week high of around $244 per share. And at this current point in time, the company has a market cap above $20 billion and sits with a forward PE right around 45.6. And e-commerce is here to stay. The pandemic absolutely accelerated that trend, and I think it will benefit Etsy for long into the future. And we can see at this current point in time, from that high point as of March 1st, 2021 of over $244, they have seen a major pullback of over 32% back down to this current level. So now may be an excellent opportunity to buy the dip in this fast-growing e-commerce brand. And they're included in this week's episode because the company's hosting their 2020 annual meeting of shareholders on June 11th. So this is a big event. We're looking forward to updates on the business, new announcements of their future plans for expansion, and an overall idea of how the company is going to grow over the next few years. So this event takes place on June 11th, and really looking forward to hearing what Etsy's going to say. And also, I included them in this episode because just last week, the company made a major acquisition in a deal worth $1.62 billion, and they acquired the fashion resale app Depop. Depop, if you're unaware, is a very popular app for the younger generation where individuals can sell or resell their used clothing. So this is a trend where you can buy and sell used clothing on the app or even shoes and different products or accessories directly from the Depop platform. So it's another consumer-to-consumer business, and I think as a whole, it will fit very well into Etsy's current ecosystem. And taking a look, the company believes that the overall US second-hand market, so my clothes selling to another consumer, is projected to grow at over 39% per year to over $64 billion throughout 2024. So the demand for a platform like Depop is only going to grow as well. And currently, Depop is the 10th most popular site among all teens in the US by traffic volume. The 10th most popular website, with the endless amount of sites that this younger generation uses every single day, Depop is the 10th most popular, which is absolutely incredible by the fact that Etsy bought them for only around $1.6 billion. Because this is a long-term play. Currently, 90% of Depop's active users are from Gen Z, my current age group. And we can see 7% are less than 15 years old, 45% are from 15 to 18, and 36% are from 19 to 25. So these are still the younger generations that are in high school, college level people who don't have a lot of discretionary income just yet. But these are the individuals who are used to buying and selling used clothing. So as they get older, as they transition into working ages, that trend and that popular idea of feeling comfortable buying and selling used clothes online will stay with them even as they get older. And that's a trend they will pass down to the next generation as well. So the fact that Depop controls this audience right now, as these people continue to age and they get more discretionary income, I think the Depop platform will grow and see accelerated volume as well over the next 5 to 10 years. So Etsy acquiring this company when they're still young, I think is really beneficial and will bring a lot of consumers and a lot of traffic to the Etsy platform as well. And overall, the younger generation is the future of the nation and of course, the world's population. So getting control of that, making this acquisition when they're still young, before they have the discretionary income, I think is a smart play from Etsy. And currently, 1 in 3 16 to 24-year-olds in the UK have downloaded the Depop app. A third of all the 16 to 24-year-olds in that country and in that nation have downloaded Depop. That's absolutely incredible and shows you how dominant this fashion app really is in the market. And if we take a look at Etsy as a whole, so not just the Depop acquisition, but the entire e-commerce platform, their growth numbers are absolutely spectacular. Their gross sales volume is up to $3.1 billion, which grew 128% year over year. The company's actual revenue in Q1 2021 was up 141%, which is absolutely insane. And their adjusted EBITDA came in at $184 million for the quarter, which was around a 33% margin. And going forward, the company has seen a growth in their active buyers, repeat buyers are growing as well, and new buyers are picking up. So overall, the company is still seeing some major acceleration and they've set record quarterly metrics in all of these categories. So going forward, as more active buyers hit the platform, there are more repeat buyers, the overall Etsy ecosystem and their revenue will grow quarter after quarter as well. And just taking a look at a longer term perspective, just at year end 2016, the company only had $365 million of total sales. But year after year, we can see the growth and the explosion throughout 2020. They more than doubled their sales in the past year, and they've now grown to over $2 billion in the past 12 months. And taking a look at the bottom line, they've been profitable over the past 4 years as well. And as they exploded their revenue, so did their net income to up to $480 million in the trailing 12 months as well, with a net margin greater than 20%. So I'm a big fan of young tech companies that show positive income and positive cash flow. And we can see, according to Etsy's cash flow statement, they're doing just that. Year over year, their total cash flow has been picking up from $142 million back in 2017, all the way up to $189, $670, and now $787 million of total free cash flow in the trailing 12 months. So for a company that's still early on in their growth and development, and I think the overall Etsy e-commerce platform can be much larger in the future compared to where it is today, the fact that they're getting positive net income, growing free cash flow, accelerating revenue is all the right trends in the right direction. And I think overall the tech sector, a lot of the work from home companies, a lot of the pandemic growth plays that grew 100, 200% are all undergoing a major pullback, and a lot of them are not profitable just yet, and I understand why they're falling. But Etsy is an e-commerce platform. I think they're going to be dominant for long into the future. The company's management is phenomenal, getting new deals to expand their business to the younger generations, and they're profitable. Nice growing free cash flow, positive earnings, great revenue growth, new buyers entering the platform, and I think Etsy is definitely a brand worth taking a look at this current point in time, and that's why they're included in this week. And going forward, according to analysts, they're forecasting 48% expansion year after year for the next 5 years. And the stock is currently considered a strong buy, coming in at a 1.7. The share price of $164 is well below the 12-month expectation of $226. And going forward, definitely a company that I think will be very beneficial and grow to become a prominent player in the e-commerce sector for long into the future. So they were the second company included in this week's episode for stocks to have on your watch list. And now we're going to move on into stock number 3, which is another beaten down tech company that I believe to be undervalued at this current point in time, and its ticker BABA, which is Alibaba. Of course, this is a Chinese tech firm. They trade for $219 per share, and over the past year, the company's been pretty much sideways, only up by 0.45%, but we can see they had some major acceleration in late 2020, and from a high point of over $300 per share, they have wiped away all of those short-term gains. The company currently trades with a market cap at $593 billion and a forward PE of only 21.4. And we can see they actually peaked at around $317 per share back in October of 2020, and from that high point, they have now fallen down over 30%, back down to $219. So now may be an excellent opportunity to buy the downward momentum in Alibaba over this upcoming week. And the company shared some amazing numbers as of late, and their growth, although the share price has taken a hit, is not slowing down. And when you buy into Alibaba, you're getting much more than one simple, easy to use e-commerce platform. If we take a look at their latest investor presentation, the company owns so many different brands under the Alibaba umbrella. So many different retail marketplaces. They have new seed businesses. They have cloud computing, digital media entertainment, innovation, Chinese commerce, retail, other options, as well as like in-person stores. They have international e-commerce brands as well, like AliExpress in North America. And overall, the company is so well diversified across so many different sectors of the tech industry and e-commerce marketplace sector. I think this brand will be dominant for long into the future as well. And if we take a look at the quarterly results that they just shared, their total revenue in the past quarter, so in a 3-month time span, was over $28 billion, and that grew 64% year over year. The company shared a 64% expansion in quarterly revenue, and the stock is still down 30+%. And all 4 of Alibaba's business categories saw some nice high double-digit growth, led by their core commerce, which grew 72%, and the second fastest segment was their cloud computing, which picked up 37% year over year as well. And cloud computing is the future for a lot of big tech companies. To see Alibaba continue to expand that revenue stream at such a fast rate is very, very impressive. And when I say Alibaba dominates the Chinese market, they really do. Over the past quarter, their annual active consumers is 811 million people. 811 million people shop on one of Alibaba's services. And secondly, their mobile monthly active users, so they have 925 million people logging into their app and using it once a month. 925 million people. Almost a billion people are using Alibaba services every single month, which is incredibly impressive. And the company's balance sheet is also extremely strong, and they currently hold over $72 billion of cash sitting on the balance sheet. So they have a ton of room to grow their business, reinvest in R&D, continue to grow their operations, pay down debt, and even return capital to their investors in the form of share buybacks. So Alibaba is a very fast-growing tech company, and if we take a look at the 5-year income statement, in only the past 5 years, they've expanded their total sales from $23 billion to over $109 billion of total revenue in the past 12 months. From year-end 2017 to the trailing 12 months, they've grown over 4x their total sales from $23 billion to over $109 billion. These growth rates are absolutely remarkable. There's not many companies on the market that have seen this fast of revenue expansion at such a large scale. It's much different for a smaller tech company to go from $1 to $2 billion of revenue, but Alibaba has gone from 23 billion to 100 plus in only 5 years, and that just shows how dominant this company really is, and I think it's extremely undervalued after the 30% decline in share price. I do understand there's tensions between the US and Chinese government, and that does add to your potential risk, but do some research into the company, determine if you're willing to buy into this growth play and take on that extended risk because of the government intervention. And in the past year, this company is very profitable as well, with just under $23 billion of net income over the past 12 months. So $109 billion of revenue with over $22 billion of total profits during that same time frame. And going forward, Wall Street does believe the stock is a strong buy, coming in at a 1.7. The current share price of $219 is well below the 12-month expectation of $293. And I personally believe, in my own opinion, not financial advice, not recommendations, that Alibaba is definitely a strong company worth taking a look at right now during the major decline. I think on this next upcoming week, I'll be closely following the company and may officially pull the trigger and add this company to my own portfolio. So that was stock number 3. And now we're going to continue on into the fourth and final company in this week's episode, and its ticker F. The Ford Motor Company, currently trading for around $16 per share, is up 143% over the trailing 12 months. The company has exploded from a low point during 2020 and now sits near all-time highs. They have a market cap at $63 billion and are trading with a forward PE just above 15. And recently, the company has reached 6-year high points, and big firms like JP Morgan continue to increase their price target for the company all the way up to $18 per share. So overall, they believe going forward that Ford and their new trend into electric vehicles with the new F-150 Lightning is really going to help boost the company's bottom line, as they expect these vehicles to be more profitable. And going forward, the growth of EV vehicles as a whole is really going to help the company's total revenue, earnings, and overall cash flow continue to expand year after year. And we can see I included them in this week's episode, not because the company's at all-time highs, but because I think the stock can go even higher. That's because on Tuesday, June 8th, the company's revealing their 2022 Ford Maverick. This is going to be a hybrid, compact pickup that's smaller than their current Ranger, which is a mid-sized truck. So this is going to be the new truck, the smallest size on the market, that also comes with a lower cost. And I love this move from Ford. I think getting into the lower cost truck market is going to be absolutely remarkable. Ford is the number one seller of trucks in the world. The F-150 is the number one selling truck. It has been for decades, and going forward, I think they'll continue to dominate the pickup truck market. And now expanding into the lower cost market as well, I think really opens up your audience and your potential customer base to a lot more people. The starting price for a Ford Ranger currently sits around $27,000, and Ford said that the 2022 Maverick will come in at a cheaper price. So if they can get this product on the market between $20,000 and $25,000 starting, I think it will get a lot more consumers into a lightweight Ford pickup than any other vehicle on the market, continuing to grow their market share in the overall truck industry. So this new vehicle gets unveiled on June 8th, and that's why they're included in this week's episode. And if we go back to late May 2021, which was just 2 weeks ago, right after the company unveiled the F-150 Lightning, their share price absolutely exploded. And I believe for this upcoming week, after the reveal of the 2022 Ford Maverick, we may see some similar trends and the share price continue to climb even higher. And in only 12 hours after the new pickup was unveiled, the company received over 20,000 reservations. So I think throughout 2022, we're going to see some pickup in their total revenue. More investors and more consumers are going to be getting into electric pickups, and Ford will remain the leader in that space over the longer term. And we can see that over the past few years, although the company's revenue has been declining, there's been a slight pullback in the overall auto market, the company's free cash flow for Ford has actually been improving during this tough time. We can see that over the past 4 years, they went from $7.2 billion of total free cash flow up to over $10 billion, 18.5, and in the past 12 months, the company's generated just under $24 billion of total free cash flow. So even for a business whose total sales may be down as of late, they still generate massive amount of cash flow year over year, which is a strong sign. And going forward, analysts do have some major growth expectations for Ford over the next few years, but at this current point in time, they're showing that the current price of $16 is actually above the 52-week target of $14.20. But I don't think these numbers are updated just yet, because since the unveil of the F-150 Lightning, major investment firms have actually bumped up their price target to between $16 and $20+. So going forward, I do think this average expectation will increase, and Ford sitting at around $16 per share might be slightly below the true average expectation at this current point in time. And we can see that just over the past few weeks, they've been upgraded to overweight by Wells Fargo, they've been upgraded to outperform, they've been initiated as a buy, they were upgraded to outperform from RBC Capital, and Morgan Stanley maintained underweight. So one bad expectation, but the rest are all showing a buy or an outperform on Ford stock right now. So definitely a company I believe is worth taking a look at, or at least having your eye on for this upcoming week during the unveil of the new 2022 Ford Maverick. So that was the fourth and final company we're going to take a look at in this episode. I want to thank you for watching all the way to the end. Of course, we took a look at 4 different stocks in today's video. We went over Apple, Etsy, Alibaba, and now Ford. Every single Sunday, we go over the major upcoming events for the trading week. Usually it maintains of earnings reports, different investor presentations, new product launches, or any major event that could impact a company's share price over the shorter term. So of course, all 4 companies that we've gone through today all have a major event for this upcoming week, and I do believe that all the results from these upcoming events and how the market pertains to them will lead to some short-term volatility in each company's share price that may create some nice buying opportunities. So thank you once again for watching to the end of the video. Please hit that like button if you already haven't done so, subscribe and join the community, and I will see you in tomorrow's video.